The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 30th magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start this morning. Let's make sure we do all that we can do to have an extraordinary day. Now, my outcome during the next hour, well, it's to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, my favorite. Become your own electrician, the electrician of your beliefs. The reason is because beliefs have the power to create and the power to destroy. You and we've got the extraordinary ability to take any experience of our lives and create a meaning that disempowers us, or one that can empower us and take us to places we never even dreamed about. Think about it like this. There's only one thing that we can control in life, and that's the meaning that we give to something. That's the beauty of the markets that we trade. We've got bulls, we've got bears. One that sees an event as a selling opportunity, the other a buying opportunity. You see, it's our beliefs. It's the meaning that we give to events that we control. We control that, folks. That's really pretty cool when you think about it, because truly what we can or cannot do, what we consider possible or impossible, it's rarely a function of our capabilities. Instead, more likely it's a function of our beliefs about who we are. And that matters because all breakthroughs, doesn't matter what level you're at, we're always trying to break through and achieve more. All breakthroughs begin with a change in beliefs. The most effective way to change our beliefs, to change our blueprint, to change our wiring diagram, is to get our brain to associate massive pain with our old disempowering belief. You see, we've got to believe at our deepest level. But that belief has cost us in our past, will continue to cost us in our daily routine, and it's going to cost us in our future. That, folks, is no way to live. Now, knowing what we don't want, it's just as important as knowing what we do want. And the reason is because we want to rid ourselves of that disempowering belief. We want to replace it with the belief and the pleasure associated with the idea of adopting our new belief system out there. And here's the deal. This is the truth. At any moment, I mean any moment, a decision that we can make, that we do make, will change the course of our life forever. It could be the very next person we stand next to in line or sit next to on an airplane. It could be the next phone call we make, the next phone call we take, the next movie we see, book we read, newsletter we subscribe to. Any of these things could be the single thing that causes the floodgates to open, and then all of the sudden, all the things we've been waiting for will fall into place. It is Magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show here. We've got a flat market out here right now. Dow is off 2 points. S&P is up 2. NASDAQ Composite is up 7. Russell is down 2. New York Stock Exchange is up 3. Gold is off 4. Silver's down 29 cents. Light sweet crude off 14 cents. Natural gas back 2 pennies. Yeah. Qualifies for me as a flat market out here. So where do we begin? Well, I saw that David, our man Polar, David White here. He's got a great show that you can listen to each day at TFNN from 2 to 3 p.m. out there. He posted that May pending home sales were up 6%. So let's go take a look at the one of Stevie's tools out here, the Rhodes Momentum trading strategy. Helps us identify the trend. And I put up the one of the housing sectors. What is the ITB, I believe it is, and these are all of the equities inside. I think it's all the equities. It was as of several months ago. So let's go take a look at what makes up the ITB out here. You got companies like Beacon Roofing, Cavco Industries, D.R. Horton, Ethan Allen, Eagle Materials, Fortune Brands, Home Depot, Hovnanian, KB Homes, Lennar, Lumber Liquidators, Lowe's, Masco, Sherwin-Williams, the entire group out here. Now, if you watch this on Tiger TV, I should probably see if I can blow this up a bit. No, I can't. I think it'll do is it'll go ahead. Well, I'll do that. I should have done it. If I do that, it'll have to go ahead and repopulate everything. Just pay attention to the colors. Maybe it's difficult for you. If you're just watching in on your mobile device, that's a wonderful thing. Thanks so much for doing that. And if we take a look at this, I've got identified here both the monthly, that's the left-hand side here, the monthly, the weekly, and the daily trends out here. Now, if you want to see which ones are the most bullish, we'll just simply go ahead and I'll just hit this row filter out here. And this gives us our most bearish of the entire group. The companies like CVCO, Cavico Industries, Hovnanian, which is HOV, Lennox, MI Home, Sherwin-Williams, Watsco out here. So let's go. We'll just start with those. Daily trend is bullish. Weekly trend is bullish. Monthly trend is bullish out here. So I'm going to put this on a different screen. We're going to just we're going to do something a little different out here. I always like to do something just a little bit different. Let's go take a look at these equities. Let's go see what we can find. Let's go searching for some gold mines out here. Let's take a look at CVCO as the ticker symbol. That is Cavico Industries. So let's go see what it is doing here as we speak. Traveling out at a price range of 85.47. It's taken on a swing point. Most recent swing point out here was a 10-minute chart. We don't want to look at a 10-minute chart. How did that happen? Let's go take a look at a daily chart. Yeah, let's look at the daily chart. Okay, now we've got it. It's still priced at 85.47. That hasn't changed. But if we take a look at this, it's trying to break out of on this is a daily chart, trying to break a B point today of a large A to B equals CD to the upside. It is in the super overbought zone out here. Nonetheless, let's go see what it's doing. Now, the swing point on this is March 19, 2014. Volume there, 28,000 shares. And today so far, it is, well, Friday was up with 273,000 shares. Hey, how about that? Big volume inside this equity here on Friday, and did not get above the highs. Kind of unusual. Did say that it would test those highs. Again, that's what it's doing here. Today, volume in this equity, 6,500 shares. So not a ton of volume inside CVCO, Cavico Industries, but we pulled this stock chart back here. This may be a little gold mine. This thing looks pretty nice, huh? Looks very nice out here. In fact, you take a look at Friday's action in here. I don't know what was behind that move, but some nice volume, most certainly. If it takes out the B point, let's put this on a weekly chart. Let me do that here. See on the weekly chart if it's above its unfair reason. Oh, it is. Even on a weekly chart, this thing is trying to break out. Now, last week, the volume there on that week of March 17th was 169,000 shares, and last week was 445. So that's looking pretty darn good out here. If it can bust out those highs, do it with volume. The A to B equals CD pattern inside this equity. This is over a period of time now, so it's a longer-term holding. This is CVCO. The A point is going to be the low on April 15th. The B point out here is going to be the swing it's dealing with March 17th, and the retracement was shallow Hal out there, only about a 30% retracement. That says that this has the promise of price in the 116 to 128 level. CVCO, not a bad-looking equity out here at the moment, and that is coming from the housing sector out there. So you can see that the Stevie, the Rhodes Momentum Indicator System, it did its job. It picked out a bullish stock on a monthly, on a weekly, on a daily basis out here for sure. Let's go take a look at the next one up on the list. Let's go take a look at Hovnanian. HOV is the ticker symbol. Down 6 pennies here this morning. Again, we're looking at a daily chart, but this thing also had some nice movement in it the last several trading sessions. Off of the lows with 7 million shares on June 25th, another 8 million shares the following day. The day after that, meaning Friday, 8 million. Yeah, so this thing has got some nice juice behind it, Hovnanian. So that is off of the lows out here. What's it running into? Well, it's running into a little bit of a supply line here, a little bit of a downdraft. There's a gap open. That is the trading session here from March the 5th. It moved down with 17 million shares out there. So this ought to run into a little bit of agitation. Nonetheless, this thing is, let me pull this back even. Oops, didn't mean to do that. Let's try, does that work? Yeah, let's pull this back a little bit further. Out here, looks like Hovnanian is most certainly off of its lows. It's above its resistance line, its market profile at 478. Got above that with some conviction. Let's just take a look at the weekly chart out here for Hovnanian. See what it is doing out here. It's also above its resistance level of its market profile. So long as Hovnanian holds the 452 area, once it can clear this little supply line, and I would say it's going to be able to do that, especially with the last several days' action out here, you ought to see Hovnanian get up and try to test the December 30th area right around 680, 635 to 680. It's trading at 524 as we speak right now. Let's take a look at the next one up on our list out here. That is going to be ticker symbol LII. Lennox International, not to be confused with Annie Lennox out there, which is she's got a great voice, doesn't she? If you don't have any of her, tunes out there, you ought to go get some. If we take a look at Lennox International LII, let's the weekly chart says it's up against resistance. That level really right where it's trading at right now, which is the $90.09 range. But let's look at the daily chart, see what it's trying to do out here on the daily chart here for Lennox. It's headed for this swing point, its most recent swing point, June the 9th. That's got volume of 449,000 shares out there today. It's trading into its congestion area, its point of control out at the $90 and about 11-12 cent area here. Volume so far today on the move, 35,000 shares, trying to take on 449,000 shares. Been trading for 45 minutes. Needs a little bit more juice out here, but if it can take that out, Lennox ought to form A to B equals CD to the upside. The swing on this low, the A point is going to be May 20th. The swing point, the B point that it's trying to deal with here right now, happens to be the June 9th high. The low point is the C point, I should say, is the low from June 25th. 1-to-1 A to B equals CD. If it can get above that B point, it's 97.58 to, you'd have to say 100.31. Let me pull this back a little further, see if there's any danger signs. Will Robinson. And actually none that I see. Be nice for this thing to clear this little area here of from April 21st. So no, it looks pretty good. And the swing point high out here, most recent one from March the 7th. Only 200,000 shares out there. So and that should be an area, potential area of resistance out there. And that's in the level of $94.69. But this looks pretty darn good too. LII is the ticker symbol out there. Let's look at the next one up on our charts out here. MI Homes is the name of the company. MHO is the ticker symbol. Let's go see what it is doing. So we found some pretty good-looking equities inside of the housing sector. I should say inside, I believe it's the ITB ETF. There's plenty more stocks inside the housing sector. If we take a look at MI Homes, it's trying to take out resistance here. It's unfair high at 24.51. It's hit it so far today. Volume behind the move today, 37,000 shares. It's going into 378,000 shares. If it can take that out, then that will set up an A to B equals CD to the upside. That price projection here, the swing point low down around May the 15th. The B point is going to be the high, the June 9th area, and the C point is a retracement, 70.786-ish type retracement into June 16th. 1-to-1 takes you to $25.35 out there. That is on Lennox. It, too, looking pretty decent out here. 877-927-6648. Right now, we've got the Dow is up 7, S&P's up 2, NASDAQ Composite up 11. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hey, how do you like that? A little Annie Lennox flipping in there. That's great. Folks, we got the Dow is up 10 points out here. S&P is up 2.5. NASDAQ Composite up 9. In that first segment, we were taking a look at some of the equities, the strongest equities, using the Rhodes Momentum indicator signals out there inside of the ITB. Let's actually go take a look at the ITB. Let's go see what it is doing out here. That is the ETF, one of the ETFs for the housing sector. It's up 23 cents here today. So let's go see what the entire sector is doing out here. We're going to see that it had formed a low back here, a little doji candle, low back on May 15th. It was doing it with less relative weakness out there. That's what you like to see. As prices coming down, you like to see it lose its weakness out here. That's in essence what it did on that trading session of May 15th as it got down. That low down there was 6 million shares, so nothing really too substantial. Very next trading session, a bull separating line out there. That is a bullish reversal signal out here in the marketplace. Nonetheless, let's go see what it is actually doing. We'll go ahead and blow this up on my chart out here. It's trying to get above its unfair high, its resistance level. So the ITB is trying to break out here. 2470 is the magic number there. Now, in addition to 2470 being a level that it needs to close above, it's also trading into a swing point out here from June 9th. That swing point has got volume of 3.4 million shares. Up there today with 2.7 million shares. Hey, that's a very strong. So it's moving into a swing point, into a B point with accelerating volume. If it can close today above that B point, meaning 24.94, you're looking at this setting up an A to B equals CD to the upside out here. So the B point is going to be that low from May 15th of the B point. The A point is going to be the low from May 15th. The B point is going to be the swing that we just talked about. That's the June 19th swing. The next retracement, the C point, happens to take place here on June 17th. Makes a little over 50% retracement, 1-to-1. A to B equals CD. If it can close above the high of 24.94, right now you're trading at 24.84. You're looking at a 1-to-1 price projection of $26.07 out there. That'll take you into its next swing point, which takes us back to February 26, 2014. 11 million shares out there. It ought to struggle at the 11 million share mark unless it really picks up accelerating volume. So that's the area where it ought to move to, anywhere between the area of on February 26, anywhere between 25.43 to 26.56 out there. It looks like that is where the ITB would like to head to. Of course, at the bottom here was making a price relative strength divergent pattern. At the top here, it's in the process of trying to form the same thing. But with the volume inside there today, if it can close above that 24.94, that to me still looks bullish. That is on ITB. So that was the housing sector. Let's go take a look at what's going on inside the... Give me a moment here. Let's go take a look at... I guess I can do it right here. Let's go take a look at what's going on inside the ETFs of the four primary indexes. Let's take a look at the Qs here, up 14 cents right now. Qs here showing no sign of weakness other than the fact that they can't get a whole lot of volume participation behind the move. What do I mean by that? 22 million shares on Friday, 22 million shares the day before. Nonetheless, doesn't really matter. Price is up above its unfair high, its resistance level of its market profile, 93.02. The level of support is 92.31 out here. That level was tested several times. If we take a look at possible... I don't want to really run the A to B equals CD because there was no retracement here inside this. I would just really take a look at expansion levels. So let's do that. Let me see if I set this tool up here to actually do the expansion. No, I got the 1.272 expansion, but did I do anything further than that? Yeah, I most certainly did. Okay, so as we take a look at the Qs here, what I'm doing, folks, oops, didn't mean to do that. There we go. Okay. If we take a look at the expansions, we're taking a look at Fibonacci expansions. We're going to go to the swing point high from March 7th. That's at a price level of $91.36. We're going to go down to the low out here. And it looks like I need to redraw this. I think I may have made a mistake on that. So let me do this one more time, since I know the tool's working. Now it's just Stevie that's got to work out here. All right, so let's do this one more time. There we go. Okay, so now we're going to go down to the low that takes place on April the 15th, and that low out there is 83.28. The 1.272 expansion of that area, which is where price closed at on Friday, or very close to it, is $93.56. You're at $93.93 right now. Its next level, even though it is in the extreme overbought condition, if it continues its ascent higher out here, it wants to go climb the peak that says, hey, altitude is $96.35. It's 1.618 expansion. Until we see a reversal sign, until we see a failure bar, that is where the Qs want to head to. 877-927-6648. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. A flat market out here. I kind of expect that to occur for the rest of the day. And a little roller coaster, maybe a little up, maybe a little down. Price is kind of containing itself in a fairly narrow trading range out here. The Dow's off 2, S&P is up 2, Composite's up 8. That's the strong indice out here. And she's really at this stage here not showing a ton of strength. The Russell off a point out here. Of course, anything can and may change out here. Goldilocks off $3. Silver down 22 cents. So it is June 30th. Let's go check out the monthly charts out here. Let's go see what it is that we can see inside the monthly chart. Let's put this up on the screen here. We'll switch to different charting applications. Now, what's interesting here about the markets, and this is the S&P 500. This is a monthly chart out here. So in the S&P 500, you've got a 16-year, 800-point consolidation range out here. Very nice consolidation. The consolidation lows in the 793 area. It's the S&P we're looking at. You can see that the area was tested several times. Well, it began back in 1997, tested back in 2002, tested again back in 2009. The highs of the consolidation right around the March 2000 highs in the 1550 range. Those were tested. That's where the highs met their maker back here in October of 2007, went down to the bottom of the consolidation range, broke out of it with some conviction back in April 2013. Gives you a price projection inside of the S&P 500 of 2350. Remember, really, the equity or the symbol behind the stock chart is somewhat irrelevant to us, right? If you just got rid of that and you just simply traded the technical pattern that you were looking at here, and you were one that said, hey, I like these consolidation patterns because my eyes can visually pick them up. And it works on all time frames. And it's got a great probability when it breaks to either side of fulfilling a price objective equal to or greater than a consolidation. Well, this one here, S&P 500 does say 2350 out here. It doesn't mean there's not some bumps along the road out here. Now, in the 2000 time frame, it made a nice little divergent pattern, price relative strength, ended up being confirmed here on the trading session, a key reversal month of September 2007. And then it was sayonara after that, went down and visited lows. Same thing really taking place back here in October 2007, a nice price relative strength divergent pattern, a nice bear sash candle that took place here the month of November 2007. That was all she wrote as well. Now, we take a look at where we're at right now. Kind of interesting. Relative strength reading on December 31st, 2013, 77.63. Where are we now as we finish the month? 77.46. So we still have just the slightest of divergence. The bulls are pulling for the relative strength indicator to get above that. You'd like to see it get above that, close above that on a monthly basis. Why? Because you need some time span in between the number of months before this pattern actually would come to fruition out here. So you still have price moving higher on slightly less relative strength out there. That pattern is still in play. If that pattern were ever to effectuate, it would take price all the way back down to the bottom of the consolidation that it broke out of, or should take price back to the bottom of the consolidation that it broke out. But nonetheless, out here, no bearish reversal signals this month for sure inside of the S&P 500, and it looks pretty darn good. Let's go see what the Dow has on it. The Dow has got its own 15-year consolidation, but it fulfilled that consolidation breakout. It did that the week here of about January in 2014. That was a 4,550-point consolidation. So that one has broken to the upside. Now it's just fulfilling an A to B equals CD to the upside here. The 1-to-1 on this thing would take the Dow up to price point of, where is it? It's already there. The 1-to-1 is 16,803.49, but because of the retracement or lack thereof back in October 2011, really more likely offers a promise of 18,532 over time out here. It, too, does have the potential for a price relative strength divergent pattern, just like was set up back in 1999, 2000, just like was set up back in 2007 time frame. You've got the Dow moving much higher with less relative strength, quite a bit less relative strength out here, but no reversal signal yet in place. This is kind of the interesting chart out here, as it is the NASDAQ that is the strongest. And we're going to finish out the month here, and this is a monthly chart we're looking at, and it looks like a pretty darn good shot. I don't know. I can't project what the day is going to end up with as a price inside the composite, but 4355.69 is the number. You're trading at 4405 out there, so it'll take a pretty decent reversal, and I don't expect that on window dressing for the month of June. Window dressing for the quarter of June out here. I don't expect that will take place, but hey, my expectations, that doesn't really matter what my expectations are. The market's going to do what it's going to do. But here's the deal. Closing inside 43.55.69, strong like bull. Strong like bull because it takes you all the way back. It'll be the first time that the market will have closed inside the March 31st, 2000 swing point high, and that's where the low is, 43.55.89. When you close inside a swing point, volume or not, volume, smallium, it says you can go ahead and test the highs out there. And that says 51.32.52. 4,400, by the way, is the fulfillment of its consolidation, of its 1,500-point consolidation all the way back from the time period of January of 2001. So it has fulfilled its consolidation pattern out here and has a 23-month cycle. 23-month cycle that takes you back into the 2000 time frame out here that works really well at identifying swing point lows or highs. April happens to be the month that April of 2014, that was its next cycle, high or low. Well, since prices moved beyond the high of April, that actually suggests that April is the swing point low out here. And closing inside there, that says, okay, I want to go ahead and move all the way up and test the top of that swing point. and that price again, 51.32.52. So very impressive looking chart for the NASDAQ composite. Now it's making higher highs. It's doing it with less relative strength, so it does have a divergent pattern, potential divergent pattern in place out here, but not till we get the reversal signal will that matter. If we look for some synergy out here, we'll take a look at the Russell 2000. Again, it doesn't do this overnight, just giving you more of the longer-term perspective because we are taking a look at a monthly chart out here. We probably get the best signal as to whether or not that comes to fruition from the Russell 2000. Now, the Russell 2000 had 11-year, 500-point consolidation. The top of that consolidation was the June 2007 highs. That was at the 856-ish type mark out here. That was broken through with some conviction back here in January 2013. That gives you a price projection inside the Russell at 1350. About 180 points or so, 170 points higher than where it's trading right now. Now, here's the key inside the Russell. The Russell 2000 is actually, since the NASDAQ, since the composite is up at highs here, we don't have to worry about that. That's recouped all of the sell-off from back in February, and then some. And if we take a look at the Russell 2000, formed a little doji candle out there on March the 34th weekend. March, the month ended March 31st. Leaves were falling off the tree big time in April. But, of course, price had just come back and it tested the trend line. That's a trend line going back into the 2000 high, all the way to the trend line back here in June of 2007. So it came back, it tested the trend. Of course, it didn't really break out of a trend, right? The trend was higher. It broke, but it did come back and it tested that. Did that during the month of May out here, and then it just simply catapulted. If it can take out the doji high out there from March 31st, 12.82, that'll give us a pretty good indication that 1350 will be next up in its cards. At 2, making higher highs with less relative strength, but no reversal signal in sight, and it's trying to get over a resistance level. On a monthly basis, this is what's referred to as a evening star pattern out there. And that says that should be pretty stiff resistance, and closing above that number, 12.82, would be very bullish out there. Those are the long-term charts. The only long-term chart we didn't take a look at was the New York Stock Exchange. So let's go do that. Let's take a look at the NYSE. It, too, has its own consolidation pattern. It's broken through its consolidation pattern. It's like a 6,000-point consolidation pattern inside of the NYSE. It says that at some point in time, it wants to get up to a price level around 16,300, 16,400, something like that. New York Stock Exchange right now for the month of June is completing its 1-to-1 A to B equals CD to the upside. 10,952 was the number. You are now trading at 10,978. It has a relative strength reading of 71.44, going up against 73.51. So it too moving slightly higher, more than slightly higher, moving higher on less relative strength out there, but that pattern can be resolved over time period out here. So the New York Stock Exchange, so long as she holds the 2007 highs, 10,387.17, then this will not have been a false break to the upside out here. Even if it comes back and tests it and holds that level, that will be giving you the promise of a eventual price projection in the 16,000 area. That was on the. So let's take a look at the longer term. Of course, the month doesn't come to an end until the end of the trading session today, but short of some massive reversal today, monthly charts look PDB, pretty darn bullish out here. Let's go take a look at silver, gold, light sweet crude. Let's go take a look at light sweet crude. In the last hour, I had mentioned on the, I think it was a daily chart for light sweet crude, it's trading down 15 cents right now at 105.59. Light sweet crude is had come down and tested its market profile resistance level, and it has held that area. Not necessarily a good thing for you and I at the pumps, because 105.10 is that number here. If it can close below 105.10, that would be a good thing. That would suggest price would come down and test the 103.48-ish type level. But so far, that resistance area, you can see once it broke above resistance back here, a trading session of May 19, 2014. We've never seen a close back below. Once it's been able to break through, we've never been able to see a close back below that resistance level. I'm referring coming back into it, broke above it in May 19, 2014, came back, tested it, was never able to close back below. Once it broke above there on June 12th with the volume, has never come back and closed below that level. If we do see it close below 105.10 or below its resistance area, that then would be saying, okay, we may be seeing some kind of change in trend in place. But right now, in the case of light sweet crude, at least utilizing the market profile system for us to trade with, it is not giving us that message whatsoever. Goldilocks right now trading at about the 1317 area. Gold is just simply continuing to move sideways, working off an overbought condition out here. Nice retracement down into the 1293-ish, 1299 range. Might be the next optimum buy area. Close below 1299. That says, hey, comes back to the 1273-ish type range out there, the breakout area. From back on the trading session of June the 19th. Let's go take a look at some things moving inside some of the sectors out here. Let's see what we've got. Let's go take a look at Apple. Apple's up 54 cents right now, trading out at 92.51. Let's go see what it is trading into, because it's got the largest weighting inside the technology sector, inside of the XLK for the S&P 500. See if this thing is breaking out. It is not breaking out just, well, it is. I take that back. There's a market profile that formed back here just on Friday. We'll use really as the market profile the one that had been in place since the June 12th level. That's right at a price area right around 93.79. That's going to be the swing point low-ish range from June the 10th, and that area is at 93.57. There's 62 million shares up there. That level on Friday, moving up with 64 million shares, not too shabby. Today, done 12 million shares, hour and 27 minutes of trading out there. So 12 to 16, it's doing about the same type of volume today on a Monday, on a lazy Monday, right around the 60 million-ish type of range, moving into 62. So if it could get up and it could trade above 95.05 with more than 62 million shares, that would be a nice A to B equals CD to the upside that Apple would form, and that's a doozy out there. That's 74 to 94. That's another 20 points or so out there, and that's inside Apple. Let's go that's the daily chart for Apple. Let's look at, let me see here. I'm just kind of navigating through the different sectors. I've got each of the equities here, the top 10 weighting structure within inside their sector. Let's go look at the energy sector. Let's look at ExxonMobil, number one weighting structure inside there. Schlumberger, which has been a big mover out here. This is back 41 cents. But let's go look at ExxonMobil. ExxonMobil right now trading out at $100.93. Should try to find support at its next swing point low from June 30th. Now, 9.3 million shares back there. Trading, just testing it. So today it's testing it. It tested it on Friday. Tested with 15 million shares. Day before 8 million shares. So Friday, a low volume day, even though it was rebalancing inside of the, the Russell 2000, ExxonMobil coming down with too much volume into that swing point. Today, 1.5 million shares, so you've got still too much volume as it comes. Well, maybe the similar type volume as that June 3rd low. ExxonMobil ought to test $99.59 at a minimum. Right now, flat market out here. Dow's off 9, S&P's up 71 cents. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Right now, the Dow is off 15 points. The S&P is down a quarter. Composite up 4. Russell 2000 off 3. Kind of the weak link out here. Gold's off $2. Silver down 19 pennies. My suggestion is to expect a market that is in just simply a narrow trading range, flat to maybe slightly higher out there as we close out the month of June, which looks to be pretty strong out here. If we so that's my expectation for the day. I don't see anything getting out of hand as we speak. VIX index still below the 50-day exponential moving average. That is bullish to sideways. It's trading at 1156. That 50-day exponential moving average 1226 out there. That is the area that needs to be monitored very closely. If we take a look at the S&P futures out here right now, ES Mini, the market profiles out here. I like when we can find some synergy between either resistance levels or support areas. In this case here, resistance levels. And I'm taking a look at the 120-minute time frame chart and the daily chart. Daily chart obviously is going to trump the 120-minute time frame, but just to get a feel as to what's going on, whether or not there's going to be any kind of a breakout that occurs. 1954.75 is the market profile resistance level, which price has not been able to close above. Period. It's tested that area, but it's not been able to close above it. Closing above it, that would be bullish. Closing above the actual high of June 23rd, that would be even more bullish. That is at 1959.79. So that 1954.75 area has been contained as a resistance point. That takes me now over to the 120-minute time frame chart out here. We'll see on this 120-minute time frame chart, it too has a market profile in the 1954 range out here. It had one back here right around the June 26 area that was at 1955. So that is a strong area of resistance so far on this 120-minute time frame bar that we're in, which began at 10 o'clock. It ends at the end of Basil Chapman's show at 12 noon, just as Larry will be coming on the air here on Magnificent Monday. If it can't bust it up, it'll try to bust it down. What does that mean? It means you ought to see price gravitate in between the 1954 to 1946 to 1943 type area out there. And so if it just kind of contains itself with inside that range, nothing to get excited about whether you're bullish or bearish out here. Maybe the markets open back up and we get some actual movement. Perhaps it's tomorrow. And perhaps not. Maybe it's going to wait till after the 4th of July, till next Monday out there. But that's what's going on inside the markets as we speak here. See if there's anything else of interest. Let's look at some movers and shakers today. To the upside, you've got GW Pharma. Illumina Inc. is up a nice 4%, up $7. PPG Industries, that's completed an A to B equals C. To the upside, that's up a nice $6, trading out at the 210 area. To the downside, Ray Onier, that's off $13, but I think they spun off a subsidiary out there, so that's what's behind that move. Intuitive Surgical's down $11. Intercept Pharmaceuticals off 3, off 1% out here. McKesson's off a couple of bucks. Nothing really huge to the downside. To the upside, Dicerna Pharmaceuticals, they've cured something out here. That stock looks pretty good. It's 1-to-1 A to B equals CD, though it takes it up into about the 23.59-ish type area, but it's got some pretty decent volume behind its move out there. So it is Marvelous Monday. That means our lineup today, we've got our man Basil Chapman. He's going to be up next. He's going to take you for a little tour on his surfboard as he rides the Chapman wave. After that, we got Larry Pesavento. He's going to talk probably about the 2 P index dates that occurred last week. They may have marked a significant high out there. Then we got Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. It's always been great to be with you. Have a great Monday, folks. I look forward to seeing you bright and early tomorrow morning. Take care now.